Welcome back to the channel. We're coming out with you a new episode. Today is July 25th. The market was up pretty significantly today. Came back down over $500. Came back down. The dollar's up $229. The Nasdaq is now down $21, and the S&P is up 2.59 $2.59. This I don't know what to say about this. I was hoping it would go up some more. I really want to sell some more of my positions to prepare for the bubble bursting that I believe is going to bust. And believe me, I think we're in an overall bubble. I believe housing is in a bubble. I believe the stock market is in a bubble. Nowhere near 2000. 2000 was, the internet stocks was crazy. It was irrational. This is not irrational. I just think that assets are overvalued. But today what we wanted to talk about is, I talked about yesterday about being ready. And today we want to talk about one way that you can be ready. And so what we're going to do is we're going to talk about the QQQ. So the QQQ is a ETF that tracks the Nasdaq 100 companies. So the top 100 companies in the Nasdaq is within this QQQ. And what this will do for you is, one, if you're not really taking the time to study individual companies or most of these technology companies, this will be a tracking for all those companies. So you really don't have to know a whole lot about stocks. You don't have to look into individual stocks. You can just use this as a matrix. And because y'all know, I believe that we're in a bubble. I believe we got a long way to go. You can see up here the 52-week high is 503. We're now selling at 462. So it's come back some here in the month of July. The 52-week low is 342. I believe we can see that. I believe we can easily see 342 easily. And so if you just have some type of market watch or something like that, put QQQ in there and you will be able to track this. The good thing about, as I said, the good thing about this is that you don't have to know much about investing. All you got to do is know that what you're buying into. It does pay a dividend yield. It does pay a dividend of 76. What I was the last dividend, 76 cents. It has a dividend yield of 58 cents. So you will be paid a little bit while you're waiting. But this is a good matrix. We talk a lot about the SPY in the culmination. The book that we wrote that will help you deal exactly with the type of situation we're talking about now. We're at a high. You shouldn't be purchasing the QQQ at this point, even though it's come back a lot. But if you are don't watch the market at all, you can dollar cost average. This wouldn't be a bad place to go in at dollar cost averaging, even though I believe that you're going to be down significantly. But remember, when you dollar cost average every month, the lower it go, the more you can purchase, the more you'll be able to purchase, and the larger your purchases be based on the fact that how much, let's say if you was putting in $1,000 a month, the lower it go. If it goes to 250, you'll be buying 4 as compared to a couple weeks ago, you would only been buying 2. So that is something that you can do, but I really wouldn't start that operation until we get this big flush out and this Berber bust. Someone kind of asked me, well, I hope you're right. Do you know you're right? I think this is one of the real orchestrated downturns that we'll probably ever see. The Fed has been announcing that they're going to lower interest rates for a long time now to get inflation under control. And I just believe normally something has to break. So maybe we won't get nothing that break like a bank or something like that. But if Powell, which is the Federal Reserve Chairman, starts to lower interest rates faster than what we believe or what he said he's going to do, that right there will take the market down significantly, because people will believe that the economy is worse than what they thought Powell thought it was, which it is worse. We know there's people out there struggling, barely getting by, people losing their jobs. So we believe that's the market has nowhere to go but down. I mean, we were at all-time highs. But let's go and what we can do is just look at the profile real quick over there so you can kind of understand what I'm talking about. So these are the top 10 holdings. So as I told you, you'll be able to take advantage of all of the big stocks that's on the Nasdaq. What it says is the investment objective. The fund sets to provide investment results that generally correspond to the price and yield performance of the component securities of the Nasdaq 100 index, as we talked about. So you can see here, you're getting all the big boys, and a lot of them is falling fast, and I think they got a lot more to go. Got Microsoft, Apple, Nvidia, Amazon, Broadcom, Meta, Alphabet, Class A, Class C. You even got Costco in there, and you got Tesla. So you probably got, if you follow stocks at all, you're going to get a portion of all of them out there. And if we add these up right here, just taking a quick glance, I mean, we're talking about these 8 stocks right here make up, with these 10 stocks right here make up, look like about 30%, 30% of the overall NASDAQ 100. So you will be getting a lot of your shares, or a lot of your money will be going into these stocks right here. So I know we talked a lot lately about the bad news and how it's going to be blood on Wall Street. We still believe that. But what I wanted to do today was show you another option besides the SPY. If you're not in the individual stocks, that this is also a tool that you can use, and you would take advantage of the upside of technology stocks. Now you do gotta watch, because it is a lot more volatile. The S&P is made up of 500 companies. This one is made up of only 100. And these stocks right here swing the most. These are ones that's been swinging, up really high lately. Good luck investing. If you like the content, please share, please subscribe.